Latest portfolio calculator results through January the 15th, Friday. Strong start to the year in a lot of the portfolios. Last couple of days, Thursday and Friday, were really challenging trading, and so gave some of those profits back in a lot of those portfolios. The one exception is the 50K portfolio. It is down on the month a little bit. I have one change I want to make, and so we're going to go over this change, quickly look at the other portfolios and where they are on the month, the all 78 strategies. If you're trading all 78 strategies in the All Strategy Access, let's take a look at the results here. You see it is up 10,000 on the month. Then if you look at the short list, we said, okay, these are 51 of our strategies that we anticipate will work well in 2021. So we pared down all the old strategies. None of the new strategies are in this All Strategy Access Shortlist 51. No new strategies included. Very small drawdown. It's up 7,900 on the month. It was up more, and then it's given some back. And then the All Strategy Access, the short list of 51 with 7 new strategies. We said, okay, we're going to trade the 51 strategies from what is familiar, and we will be willing to add 7 new strategies that are a little more unproven. And it is up 14,000 on the month. The stock index portfolio, 27 trading systems. We've made some revisions, added some new strategies, kept some of the old strategies, and these it's up 262.50 on the month. And then if we go to the 200K portfolio, it is 40 strategies, and we revised this as soon as November the 30th. So we had a good revision on this, November the 30th, strong start for this setup, up 17,000 in a 74.86 drawdown. And we already went over the 50K portfolio, the micro stock index and micro gold portfolio. This is based on the ES. There can be deviations, slight deviations in the micros. We back test this on the ES, NQ in regular gold contracts, and then take 1/10 of that. And so there can be slight differences. You can either do slightly better or slightly worse because these swing highs in the micros and the minis can be slightly different, but plus 264.50. And so if it repeats the past, this is a good place to get in because we're at these drawdown levels after a strong start. We made equity peaks in this one, and then it has this drawdown level. And so if we get December chop again, it'll go negative again because that was really, really difficult chop. But if we get a market that's more like what we've had in the past, lots of room to the upside as you see how strong Q1 is. And this is true for a lot of the portfolios, not just micro stock index and gold portfolio. So back to the 50K portfolio, the one change I'm making, by the way, this could recover. This could be a great place to start this portfolio setup. It's in an $8,237 drawdown out of 10,617.50, revised on December the 12th. And you know, here is where the drawdown is. So it could go up. Night Trader could go up, but Night Trader is the one strategy that I like the least, and the reason is, in the last 6 months it hasn't performed, but I don't necessarily remove a system because of its last 6 months performance. There's systems that haven't really performed the last 12 months, but I don't like how this strategy is performing in this market, and I sense a change. The market, this new equity peak occurred in September, had this drawdown, which is done in the past, but as the market made new highs, Night Trader did not make new equity peaks. So we had this drawdown, strong recovery, and now we had 2 losses this week. And so we still don't make knee-jerk reactions based on, we had 2 losses this week, it had a bad week, let's get out. This is more of a, well, we had this drawdown, then we had a rebound, and then the market's making new highs, but this is not. And this is one strategy that should really be correlated with the market and catch those moves better. And so the price action, this could be forecasting bearish prices the way it's moving up. If for example you think about a market that is diverging and making a topping pattern, the micro structure of the market could change, and Night Trader could be picking up on this. So only the future will tell for sure, but I want to be proactive since this has a $1,500 stop loss. Now there's been 12-month periods where this has made nearly $20,000 runs, and so it's been a great strategy and something we may add again, and something in our other portfolios where there's more diversity. But right now what I want to do is I want to add gap continuation and reverse, and so I want to show you that. So I made a video earlier on releasing this strategy and how well it's done since 2011. Here's how it's done since 2007. Now it hasn't done terrible. The drawdown is bigger, but we like to look at long back tests. We like to look at short back tests. We like to say, okay, this market environment is different from this point. We can trade it here. It is in the portfolio. The results in the portfolio calculator include all of this. So it includes this back to 2008. And so you see how well it's done in recent market environments, higher daily dollar ranges. And so it does have a steep drawdown, as any strategy can have. This is inclusive of slippage and commission, so even with $25 round turn slippage and commissions, it's 53. Since 2016, beginning of 2016, it has about $140 average trade profit. And so it's day trade. It uses $1,000 stop loss instead of $1,500. So you're not holding overnight, and you have a tighter stop loss. And so you have to ask yourself, how does it perform in the portfolio? So let's take a look at that. So here's the most recent portfolio calculator. What happens if, how would we do this? How could you customize the portfolio calculator? By the way, I would encourage you to if you do anything differently, if you have the All Strategy Access, if you have a portfolio of strategies, if you want to make a change, test the combined results out in the portfolio calculator first. Let me show you how to do that. First, you want to save this as something else. You download this from our site, and you go File, and you Save As. So I'm going to do that. So I selected File, Save As, and then you can save it as an Excel binary workbook. I'm going to change this to Download-Scratch. So now it's saved, and now you can show the rows of all the strategies, and then you can make adjustments. You can modify this, you can customize this, you can build your own portfolio with the strategies that you have. And so what I'm going to do is I'm just going to highlight all of these cells because I don't want them to change based on the drop down. I'm going to go copy, and I'm going to say paste special, and I'm going to select values. Now the drop down menu no longer works for this, and we don't want it to because we're going to be manually changing things, and I'm going to show you that in a minute. It's kind of slow sometimes. There's a lot of data in here. I'm going to delete that. And now, notice 10.61750 is the drawdown. So right here, and we are going to we have 48.76 there. We're going to change to gap continuation from ES Night Trader. So let's remove Night Trader. Remove that. And it's updating now. It takes a while to update this sometimes. Like I said, it's got a lot of data in it. And so let's go with gap continuation. Scroll down here, gap continuation in reverse E-mini S&P. Hit that button and it will update and calculate the results. We're waiting on those again. So let's see what the results are. Scrolling up. 48.76 was the old number. 47.50. The old number was about 10.617. This number was around 8,100, I believe. So you're not as in a steep of a drawdown. You're not switching to a situation where you're at a zero drawdown. There is a $2,000 difference there that you would have to factor in. And one of the reasons why you would start in a drawdown for transitions like this, or continue to wait for this to go into a steeper drawdown, it may not. It may recover from here. Gap continuation reverse has had 3 losses in a row, and so it's a good fit for this strategy portfolio, the way it's set up, the frequency in which it trades, and you can see the historical results. It's made 81,000. Hypothetically speaking, 81,000 would have made in 2018 had you traded these setups, and then 30,000 in 2019 and 70,000 in 2020. And so unless the market changes in a big way, unless we're in a new regime here, I anticipate some similarities from previous years in this market environment. Bear markets, these periods included some fast bear market sell-offs. They included some bull markets, and it's not just stock indexes. It includes crude oil, soybeans, gold, and so this is the update that I'm using for the 50K portfolio. It'll be gap continuation in reverse, and so you'll then have the opportunity to no longer need a overnight. You don't want to need to manage Night Trader overnight and worry about $1,500 stop losses in that portfolio. So here it is. Good place to get in. Good place to start. And we have a webinar for this coming up. You see, in recent years, there's been more volatility. I'll show you that in the drawdown curve. More volatility in here in the drawdown curve, but you also have more upside in recent years also. These are bigger numbers than in the past. If you go back to 2008, 2009, those are bigger numbers there too with more volatility. So, so there you have less margin as well. Less margin requirement because gap continuation in reverse is a day trade strategy. So that is the latest update starting this month. This Monday's a holiday, so starting for trade. Actually, some of these may trade on Sunday night. Have to take a look. The day trade strategies, for the most part, won't trade with the Martin Luther King holiday. But so for real trading, more or less, most of this will start on Tuesday. And so that is the update for the 50K portfolio starting for January the 17th, 2021.